Good morning, this is Earl White. This week's video is about appraisal contingencies and appraisal waivers. If you find it helpful, feel free to give it a like and give it a share. Okay, so first, a standard appraisal waiver says something like, if the property appraised is less than the purchase price, then the buyer may cancel the contract with a return of the deposit if the seller doesn't either lower the purchase price to the appraisal value or the parties can't reach an agreement as to a middle point or some other agreement regarding the appraisal. Now, one thing to be aware of, there is no standard appraisal contingency in the standard New Jersey realtor contract. So it doesn't exist. So it has to come in attorney review. Some attorney would have to add that appraisal contingency, and some don't, either intentionally or maybe accidentally, or aren't aware of it and think it's customary, but that has to come in attorney review because it's not in the base contract. If the attorney doesn't add it, really the only thing relating to the appraisal left is the mortgage contingency, and that is in the base contract. But the buyer still would want to have the attorney add in some kind of appraisal contingency for a few different reasons. One, if you're going to exercise the mortgage contingency, normally you'll have to get a mortgage denial letter. And not all, and I know some people say this, they say, oh, if it underappraises, the mortgage is going to automatically get denied, and therefore it's the same thing as an appraisal contingency. But in my experience, it does not. I know people say that, but in my experience, getting a mortgage denial letter, it could take weeks. So one, it could just take a long time, and that's not good to have to exercise the mortgage contingency, to have to wait weeks to do it, to get that denial letter. Two, you just might not get it. Some lenders are very hesitant to issue a denial letter. They will try everything under the sun to approve a mortgage before they'll do it. And if it underappraises and they can still approve you for that amount, that size of down payment, they'll still do it even if it's at worse terms. So maybe now it's at worse terms. So maybe now you, instead of 20% and not paying PMI, they approve you at 15%, then you potentially could have PMI. So that's another problem with not having an appraisal contingency in there to protect the buyer. And obviously, just even if you kind of still want the mortgage, you would still want, and the terms might be the same, it's only slight, you still are going to have less equity in theory if the appraisal value is, the market is right on point with the market value, then you're going to have less equity in the property. So most buyers would, assuming it's not a cash deal, most buyers would want to have an appraisal contingency in the contract. Now, there is so we would want that appraisal contingency. Now, there is and keep in mind that some people do think that it's customary and assumed. Like I mentioned, it's not in the realtor contract, but it normally 90% of the time, if there's been no discussion about an appraisal waiver, it is customary and it will get in if the attorney adds it in attorney review. Though sometimes that 10%, you can find either the seller or the attorney is not willing to give a formal appraisal contingency where the buyer can just renegotiate based on the appraisal and not on the mortgage denial. Now, there is a substantial difference. So next thing, okay, so that's what the appraisal contingency is and why a buyer would want to have it. Next thing to be aware of, there's a substantial difference between a standard appraisal contingency and also an appraisal waiver. Sometimes you'll see the parties will be negotiating this appraisal quote unquote waiver. And maybe the base contract will just have a little line at the bottom that says buyer waives appraisal of up to 10K or buyer waives appraisal. But it's not really specific as to what legally is the sequence of events, what's supposed to happen. And I guess at least as an attorney, I would like to clarify, specific terms that are going to happen if the property underappraises, so there's no disputes, there's no ambiguities, there's no difference of opinion in the future as to what exactly should happen if that comes in. So the question then, if the appraisal waiver is different than an appraisal contingency, what is an appraisal waiver? The appraisal waiver is normally, when I see that language, I think most parties understand the intent is that the buyer is going to, even if it doesn't spell it out, the intent is the buyer is going to make up cash or either is going to make up an appraisal shortfall before exercising the mortgage contingency. So basically, before they can exercise a mortgage contingency, they're going to agree to make up, either changing the terms of the, either borrowing more money if they can, or bringing cash to the table. They're going to make up that shortfall difference somehow. So that's generally what the idea of an appraisal waiver, and it can take a few different forms. First form, which is kind of the one that I normally would use, is that the buyer is going to pay some amount, some amount above the appraisal value, not to exceed the purchase price. And then it would specify, at least the way I would draft it, if that event were to happen and it's less than the purchase price, then the seller has two options. Seller can either match it, that amount, or they can say no, and the buyer would then have the right to cancel and get their deposit back. So that's the first type, that you pay X amount above the appraisal value, not to exceed the purchase price. Next type of appraisal waiver is to set a floor for the appraisal. So I don't prefer to use this one, particularly if I'm on the seller side, because essentially if it comes in below the floor, the buyer just kind of has free reign to renegotiate, as opposed to being locked in. Like with the other one, the first type appraisal waiver, you pay X amount above the appraisal value. If there's a giant under appraisal, it doesn't like reopen full negotiations. That buyer's still locked in to pay at least that amount over the appraisal value, so the seller is guaranteed something. Appraisal floor is that if appraisal is below a certain price, then the buyer can just, the language might read, if the property appraises below X amount, then the buyer may cancel with the return of the deposit if the parties can't reach, an agreement, or the seller doesn't, can't reach, or whatever the language is. But it basically becomes that formal full appraisal contingency below the floor. Third type of appraisal waiver is just a complete waiver. There's no, basically just, basically a complete and total appraisal waiver, where the language might be something like, in the event of an under appraisal, the buyer agrees to make up any shortfall in the mortgage, either in cash or borrowing more money. But the idea being, regardless of the amount, there's no floors, there's no limit to what it is. The buyer's just got to come up with the money to complete the sale at the purchase price, regardless of the amount of the under appraisal. Now, that might be okay. Now, that's a pretty big legal risk. So it might be okay in a few situations. So if the buyer is financially well off, where they can actually make up a bunch of cash, then great. Okay, waive the appraisal, and you have so much cash you can make it up and not end up in a legal dispute. The other time might be okay to kind of go with that would be if the lender is either going to not require an appraisal, or they'll guarantee the appraisal price. So obviously then you could agree to a full waiver. You probably don't have too much risk there. It also could be okay if you have a high down payment, say you're 50% down or something like that. Even if there's a pretty big under appraisal, you can probably switch from 50% down to 25% down, whatever the number is, and then you wouldn't have to come out of pocket all the cash. You could borrow the additional amounts to have coverage in the event of that under appraisal. So those are normally the time. Now, if you don't fit any of those buckets, and the property under appraises, you're legally obligated to make up that difference. Now, if you can't, at a minimum, you would lose your deposit, right? At a minimum, the seller will be thinking that you should fork over your deposit. But, unless drafted otherwise, you could find yourself in a lawsuit, right? You could find yourself in some kind of lawsuit, and depending on your personal assets, who knows? Maybe I like to think it wouldn't happen, but I usually don't have my clients do this unless they tell me they fit in one of those three buckets, where it would make sense. But in theory, if you agree to that complete waiver, and then you're like, oh, it underappraises and I can't make up this cash, you could find yourself in more than just losing your deposit. So if my client's like, hey, look, I need to do this full waiver and I don't really have the cash to make up a big shortfall, normally what I'll say is, okay, look, let's limit, in the event we have such an appraisal shortfall and you can't make up the money, let's put language in attorney review that says, hey, if I breach the contract, the damages are going to be limited to some amount. And if the deposit's not that high, maybe that's what we put. That there can be no lawsuits against the buyer, no going after the buyer's personal assets or whatever they have, none of that. You just get the deposit, and that's the end of the issue. Not that I want my clients to lose the deposit, but that's a lot better than having an angry seller, running to court and going after more than just the deposit. So that is a way to mitigate the risk if you really have to do a full appraisal waiver and you're not in a situation where you can really handle it. And sometimes we'll look at the comps, and not so much myself, the realtor or the client will look at the comps and say, okay, look, we think we think the risk of an underappraisal is pretty small. But it happens. Like I've seen countless, not countless, but like over the past few years where appraisal waivers have been more rampant on so many types of deals. I've seen multiple times where it underappraised by $40,000-$50,000 when nobody thought that was a possibility, and then the buyers were in a tough spot, having to make up the cash or figure out how to proceed. So that's some ways you can mitigate the legal risk. Okay, guys, if you found this helpful, give it a like, give it a share. If you need any help with any real estate deals, estate planning, feel free to reach out to us, 201-389-8275, 201-389-8275. Thank you.